So this will be a relatively unscripted video, and this will just be a thing that I noticed in the market that has recently been happening. So this is Nifty 100 chart. This is a Nifty 100 chart. As you can see, it's currently down 8.1% from its lifetime high, and Nifty 50 is down currently. mm, it's down 8.575% from its lifetime high too. But if you look at some broader cycle, but if you look at some broader indexes, they're showing that they're down. Like reality is down 20%, but it's been showing a great up move. So, and oil and gas is also down 18%. mm, Private bank is down 5, only 6%. Nifty's, we looked at Nifty, and this bank Nifty is down 6.52%. This is also down like what, 6.56%. This is 4 5%. Small cap is at its lifetime high. Nifty 500 at nearly at its lifetime high. Nifty total market is nearly at its lifetime high. See, IT is down again. Yeah, IT is like super undervalued now, according to me. So IT is down. Auto is nearly at its lifetime high. Mm, this CNX small cap is nearly at its lifetime high. FMCG is again overvalued, not overvalued. Sorry, undervalued. FMCG is again undervalued, as it's a defense sector, and being a defense sector is down like 27%. mm, Nifty energy is also like moving up clearly. Nifty metal is at its basically at its all-time high. Nifty mid cap is also going up. Nifty mid cap 100 is going up. Nifty pharma is at its all-time high. Nifty PSU is 15% down, so it's still a little bit down, but it has moved up a lot since the crash here. Mm, Nifty media is again a little undervalued, but like it still shows some uncertainty there. Nifty defense is up. Next 50 is again down. I showed you the chart. Nifty healthcare is at its all-time high. Consumer durables are going up now, as you can see. Nifty commodities at its basically not at its all-time high, but it has been gone up significantly. It has gone up significantly. Service sector is going up. Service sector has been consolidating. Capital market is up. MNC is up. IPO is up. Reality. Oh yeah, we're back here. So as you can see, mm, again, most of these sectors are below Nifty, but like they're showing some momentum. They're going up. As in some sectors that are also below Nifty, those sectors are basically not going up. They're undervalued sectors like FMCG and IT primarily. Other sectors like reality are again, they're 20% down from their lifetime high. But again, look at this rally. Mm, I'm clearly sure that these guys would be overvalued here too, and these guys have shown a big run up from here, from the April US Iran war. These guys have shown a big run up. They're 45% down before. So yeah, the main thing is, while some large cap stocks are down, like they're really down, like uh, TCS or Infi, or let's say PGHH. It's not a large cap stock, but it's still a market leader. Or Gillette. I think Gillette is down too, if I'm not wrong. Yep. All of these stocks, all of the market leaders in either IT or where is Nifty 500, Nifty 50? Yeah. Actually, no. Let's put on Nifty 500. No, no, no. Let's put on Nifty 500. Okay. All of these stocks, whether it's in IT or if it's in FMCG, all of them are really down. But compared to these guys, compared to other stocks like, let's say, again, this is also down, but this has, you see, mm, this has gone up like, this has gone up how many times actually? This has gone up nearly 9 times. Well, nearly, yeah, nearly 9 times. Yeah. This has also gone up. I think the sales has decreased. All his day sales have decreased to bots. Yeah, bot is also really good. Basically, a bot is basically like a swing trading thing. Is You can swing trade it, but yeah, Aditya Birla is up. Um, ACC is like, I think it's merging to Ultratech, not Ultratech, sorry, Ambuja. That's why it's down. Yeah, so you just go down. It is going up. Enterprise is going up. Green is going up. Adani Power is going up. Aether is going up. Affil is not going up. Let's see why it's not going up. So the main point is, mm, no balance sheets. Interesting. So the main point is, while some stocks are super undervalued and they can be value plays, even in small cap like Patelink and Eschad, even those guys, some stocks are like super undervalued and they are a value play, while other stocks like let's say this one or these ones are basically either fair valued or overvalued. So right now, for a defensive investor or an investor who's dealing with a lot of or an investor who wants to, you know, maybe not deal with a lot of uncertainty in the market, they should, according to me, again, I'm not a financial advisor or anything like that, so make sure to consult your own financial advisor for advice. um yeah, so according to me, for those defensive investors or people who are looking for value buys but they can't find ones easily, I think they should either shift to IT stocks that are really down and that are cheap, or they should shift to FMCG stocks as their defensive IT large cap stocks, as in this is an uncertain time, as US is US macroeconomic indicators in US is looking a little uncertain, are looking a little uncertain, as interest rates are going down, inflation is going up. Inflation has gone up a little bit here. The civil unemployment, after it crosses this, it usually leads to a recession, as you can see here, here, and all of these guys. uh, when it goes from here to there, it causes a recession. 30-year is going up. mm, the money supply is going up too. The debt to GDP is up, so like that's also a really big sign that things could go wrong. Mm, as you can see, GDP is also going up. GDP is going up, but federal debt is also going up, and consumers are consumer confidence is falling. And here, as you can see, the the option adjusted spread is the U.S. high yield and the government adjusted spread is like at its low, and whenever it's at its low, it's not good because whenever it's at its low, it's not good because they're basically valuing basically if let's say if government securities are selling at, let's say, 5% interest, they're basically selling high yield bonds at 7.7% interest. So that means the market is optimistic, and basically they are pricing in risk incorrectly, as they're saying that there is not much risk left, and I can pay you, and you can pay much less interest to get more money, which often leads to a bull market, and which often leads to bubbles. And whenever this is at its peak, like here in 2009 here, or even in 2002, what they're essentially saying is, let's take this 2016 market thing. No. Let's take this for example. What they're saying is, if the government is selling their securities for, let's say, 5% interest, what investors are demanding approximately 26.75% interest from high yield securities, high yield bonds. So that means there's a lot of fear in this, and investors think that everything is going to go down, everything is collapsing, and basically this is the time to buy whenever spreads are up. But right now, as you can see, the spread is super down. Like the spread is at its basically at its low here. Like you can see it's at its low. How many times did it touch here? One, two, mm, and it's touching here and here. Look at this. It touched here in 2024, and 2024 was the time when AI took off, and the whole AI bubble happened. And the last time it touched around that point was 2007. 2007 again, it was the housing market. And then the other time it touched there was approximately 1998. So in 1998, again, it was the tech bubble. So as we can see, there is a pattern there, and if this continues, if the thing continues, there might be another bubble here, and this bubble might even have formed. So as you can see, like there's a lot of uncertainty, plus all the tariff tensions, plus US Iran war. There's there's like uncertainty peak. So for defensive investors who are risk averse, and who think in terms of asymmetrical return, I'm not sure if they should buy any stocks. Personally, I won't buy any stocks right now. I would rather either buy, if I really had to buy a stock, I would either buy IT or FMCG, or I would keep cash in probably a ETF, in a high yield ETF. So yeah, basically that's what I want to say. Either either find really undervalued stocks that, again, that have a big margin of safety, uh, a big a big cash reserve, so if anything goes wrong, the company could survive, even if situations don't stabilize for like 3 years or maybe 2 4 years, the company could still survive with its cash, or uh, remain in cash and like switch to some high yield or probably some government bond type stuff, as the time ahead is super uncertain. And I would deploy that cash, honestly, I would deploy that cash either when I'm fully sure that the uncertainty is gone by and I can still find undervalued stocks, or when the market is crashing and I'm finding undervalued stocks and basically there's a bloodbath. Again, I'm a contrarian investor, so I buy when the stocks are cheap, and I sell when the stocks are hyped. So that's why I'm not in AI. I don't want to be in AI. Again, I'm never gonna be in like those bubble type situations. Like, I'm not buying the hype, and I do not recommend anyone to buy the hype. Again, I'm not no one to recommend. I don't have a license, but still. But yeah, I'm not those momentum investors who keep buying the hype and then you know just just fizzle out when the hype dies. They hold stocks that go bankrupt. They hold things like pet.com or some other stuff like that. I'm more of a contrarian investor. I'm more of a turnaround investor, a value investor in my if I would say. Yeah. So let me just conclude this video. Lately I've been seeing a lot of uncertainty um, with U.S. Iran war, tariff tensions, market overvaluation, AI bubble. So, and all these macro indicators too. So, um, so yeah, if there's a defensive nature, I would recommend them to either go to stocks like IT or FMCG large caps, IT large caps or FMCG large caps, or either small caps with very high margin of safety. Or if they do not want to take any risk like that, um, then go cash, go buy government securities, and just sit tight till the uncertainty passes, or till there's a bloodbath and we can buy stocks for cheap. Again, don't forget to like, share, and subscribe to this channel because I would keep on uploading videos every week. Peace from now. For now.